First and foremost, Happy New Year to everybody. Happy New Year, Happy New Year. 2020 is here, and the Pitpreneur vision is very clear as we go through 2020 and service millions of people and pretty much increase the knowledge of investors coming into the foreign exchange market. My name is Don, and for those of you who are on social media, you can go ahead and follow me on my Instagram at Pitpreneur LLC right up here at the top. You can also follow our Pitpreneur business page on Instagram as well. Pipreneur. And I got to give a huge millionaire shout out to those that continue to support Pitpreneur from 2019 going into 2020. We definitely appreciate it. I appreciate the love. Thank you, thank you, thank you. We're just going to increase that love. We're just going to increase the traffic to our Telegram service. So we implemented our free Telegram service at the end of 2019. It was a huge success. So if you haven't joined our free Telegram, go ahead and do so today. Right now, you can just go ahead and download Telegram from your app store on your cell phone. Search us, Pipreneurs. You can go ahead and join our group. Great people, great energy, and of course, the information is key in what we give out in our free Telegram service. Definitely subscribe to our YouTube. This presentation will be posted on our YouTube, so you can refer to it on our Pitpreneur YouTube page. I am on Snapchat. For those who have a Snapchat, as you can see, take CEO action, as well as Facebook. Facebook, you can search me at Donald Brookins. I want to thank you guys for tuning in today. I want to thank you so much. This is our Pitpreneur Breaking Bad Psychology. We're going to set the tone for 2020 and give a fresh mindset. We're going to give a key discipline mindset. So thank you guys for viewing. Let's go ahead and start the show. And as the title states, trading Forex is 90% mental. In its entirety, you have to have a mental construct, a disciplined, patient mental construct to be a consistent, profitable trader. And throughout this Pitpreneur psychology breakdown, I'm just going to speak from first-hand experience from my trading career, throughout my trading journey, things that I did wrong that I want to help you avoid going into 2020. So this is first-hand experience of what I did, how I corrected this over the years, things that I wish I would have known going into Forex, but no problem. I just want to give it to you guys fresh, give it to you guys the right way to help you be a consistent, profitable trader. 90% of trading is mental. I know it looks good on social media. People want to post profits, people showing how much money that they made, people showing how they are mentoring others. But guys, I'm telling you, you have to be patient just to go through the learning curve. If you want to develop the skill and have the skill set to yourself and be able to make money pretty much at any given moment, you have to go through the learning curve. I mean, that's just with anything. As babies, we had to develop the skill set to walk. We fell and we got back up. We fell, we got back up. So just like anything, it takes patience to learn, and of course, it's a skill. When you learn the skill, it's like you can't unlearn it. It's yours forever. And a lot of people think it's easy, and it takes a lot of work. It takes so much work. It's not, trading isn't for everybody. I just want to state that also. A lot of people come into Forex thinking they can make $1 million. They think they can quit their job. They think they can retire early, and you can. These things are achievable through a strategic, planned, disciplined manner. If you're just coming in rushing, if you're an impatient individual just committing funds like I did, this is going to relate to some people. Shoot me a DM or shoot me a thumbs up if this is you. If you've been a trader who's won 3 or 5 trades, you're just so eager to get back into the market, to rush and trade and make more money. But of course, that is a for sure way to lose money. And also, you're going to lose money. You're gonna have winning trades, but what happens when you lose? How do you develop the mind to move forward, to progress, and to have a sound approach going into your next trade, being patient and not wanting to rush and get that money back? Because of course that's gonna happen, but you have to develop a mindset to keep you away from certain things. That's gonna burn you. You got to stay away from things that help you lose your money. Early on in my trading career, when I first started, I definitely got lucky. I pretty much didn't know the skill of trading. I was just buying and selling and just booking profits left and right. But as the market, traded, throughout the month, throughout the week, throughout the year, I got stuck. I was in a rut. I didn't know what to do. I was just rushing to trade. I was like, well, why can't I make the money now? But of course, I didn't have patience and I didn't have the skill set. So not having patience, not wanting to learn, it's just pretty much going to jam you, and you're going to be looking for another hobby. Because again, trading isn't for everyone. This is difficult to do, but again, if you learn the skill set, if you pretty much have a system that works for you and is profitable for you, and if you stick with it, it will show you consistency. And that's pretty much patience. Our first bullet point. You got to have patience. It is a virtue, of course, in trading Forex. A large amount of patience is required, like I stated previously, in the learning curve. You got to have patience where pretty much it aligns with your system, so you can be profitable, so it can keep you away from certain emotions. It can keep you away from greed, of course, if you stick with the system, that works. And lastly, patience is just needed in general to go and profit. For those who are coming into Forex, for those who are new to Forex, newsflash, soon as you buy or soon as you sell, you're going to be in the negative. You're not just going to automatically be in profit. You're going to be in the negative to a certain degree, and you have to sit, you have to wait, you have to be patient for that trade to go in the direction to give you profit. And our next bullet point is discipline. Without discipline, there is no patience. So you have to be disciplined and stick with the certain criteria, that you've seen profit before. And you have to be able to recognize the market as it presents it to you, and act on that. You have to be able to stick with that plan and act on it as price presents, and pretty much know the bias of that trade. And without discipline, without patience, you're just going to burn yourself. And again, these are two of the main things that I wish I would have known. I wish I would have been mentored on this before going into Forex, because I lost a great deal of money. At the same time, at the beginning, I made a great deal of money, but losing that money, it hurt me psychologically. So it's gonna do far more damage, you know, when you lose the money, and without the skill set, without knowing what to do. So of course, having that discipline and having that sound approach is definitely important when trading Forex. And like I stated, greed. Oh man, I would rush into the market every day. There's not going to be a trade every single day. You don't know if a trade is going to come in London session. You don't know if a trade is going to come in, the New York session or the Tokyo session. So you have to stick with the system that or you have to stick with the system that you've seen, consistent profit with, to stay away from greed. And it's not about the money. A lot of people get it confused. Again, you want to make $1 million, but think about the money you will lose. You have to be able to react to a loss in a manner that progresses you. Don't just jump back into the market and say, I got to get this money back. Again, that is an approach that will make you lose more money, in the long run. And greed itself is not good. It's not about the money in a sense, because you would want to go for a number of pips. How many times I can tell you millions of times how I said, dang, I should have just held on to the trade longer. I'd have got more money if I'd have just held it probably 4 more hours instead of just going for a certain amount of pips. That can beat you up psychologically, making you want to get more. So in your next trade, you know, you hold it a little longer when you could have just got out because it maybe spiked up or spiked down. But again, definitely staying away from greed is primary to achieving discipline and owning patience in your trading style. Next is awareness. 90% of trading again is mental, and you have to be aware. You have to actually know what you're looking for. I would just want to trade not knowing what I'm looking at. And sometimes I would get lucky, and a lot of times, I would get unlucky and lose money. And that doesn't yield you any type of, return on that investment. It doesn't yield you a profitable trader because again, it takes you back to greed when you're just trading and not knowing what's going on. So a lot of new traders, a lot of advanced traders, if they don't know what the setup is, they pretty much just stay away from the market at that given moment. So just having that awareness of the market structure, having that awareness of knowing when to buy, having that awareness of knowing when to sell, and very importantly, having that awareness knowing to not trade is big, is very huge. That plays, an essential part of trading being 90% mental. And you would definitely want to have some type of checklist. So whatever system you have, I have a checklist now that I pretty much have on my phone. I have post-it notes around my computer, so I know exactly what I'm looking at. And again, without a checklist, you're just trading blind. You want to have certain confirmations. You at least want to have three or four confirmations to committing your funds when buying or selling in the foreign exchange market. Because again, without a checklist, why am I trading? And then certain emotions can take over without a checklist. Certain emotions can take over pretty much if you don't know if you should trade or not. So having that checklist keeps you in line. Of course, it keeps you on a narrow path. And that's just like with jobs. You go to a job and there's certain guidelines at your job that you abide by to keep, structure flowing smoothly, to keep organization within that job. So just like a 9 to 5 that has rules and structure and regulations, you want to have a checklist that kind of guides you and keeps you straight, and it keeps you aligned with the profitable system that you have to be a profitable consistent trader. Lastly, expectations. If you go on my Facebook, you can just kind of see early on I had made I think like $3,000 early on in trading, and that's not an unrealistic expectation. But again, I pretty much just made the money. That $3,000 I made, I lost a good deal of that because I'm thinking, well, now I got $3,000. Let me make 6,000. Let me make 15,000. Let me make 40,000. Having unrealistic expectations like that, you're gonna just lose money because it's gonna make you want to do things irrationally. Have real expectations, of course, that you can, potentially lose money. Have real expectations as far as a trading plan, because without a trading plan, you're trading blindly. You're pretty much gonna make up things that pretty much aren't there, and it's gonna seem like the markets are against you, and that's not even true on no level. You just don't know what's going on, so you're just gonna make up something with the lack thereof of the knowledge and the skill set of trading soundly in the foreign exchange market. Market manipulation. So of course you have to know this market is manipulated to a large degree. We're pretty much opening individual accounts through brokers. We're putting in, ranges of hundreds to, 50 thousands of dollars into our own personal accounts. But we have to be aware that the market is manipulated by central banks, hedge funds, and other financial institutions. They put huge orders in, and they can push your order down further if you pretty much in a position where you think it's going to buy from there. They can just pretty much push the market down lower and grab more liquidity at a given price point. The markets are engineered to be against you. They're engineered to take your money to a certain degree. So early on, I had no knowledge of this, and like I say, just being lucky. I'm thinking I'm just winning all the time, and I'm the man. I know this now. But as I learn, it's big players in the pool with millions of dollars. It made me aware to watch the market more, and it made me aware to being more patient. Because, like I mentioned, you see spikes, you see how news reacts to certain spikes in the market. So you just have to be aware of the big players, the big pool of money that's available, $1 trillion market to be exact. So of course it is ran by big banks, central banks, and hedge funds around the world. Vision. Our next slide. Without vision, you are blind. Everybody has sight. Everybody can see. But for those who have vision, those are the investors. Those are the traders who have an edge. Those are the guys who are consistently profitable. You have to start somewhere. Early on, the money I would make, I didn't always withdraw it. Like I would make, X amount of money, and that could have been money, for a phone bill. Wanting to make large amounts of money is achievable on a lot of levels. But again, withdrawing that money is just as important, because you have to start small. You have to start small, of course, as we're babies. We're babies, we grow to teens, we grow to adults at that point. So it's just a level of just knowing how can I acquire the vision to win and to be a consistent winner in the foreign exchange market. So the ability to see and to analyze price action is very important, because that's of course how you will be profitable. That is the only way that you can withdraw funds, by having vision and to know what you're looking at. And it seems fairly easy because all you're doing is buying and selling. It seems like, well, that doesn't sound, too hard to do. But at the same time, once funds are committed and once you are trading on a live account, a lot of things just go out your head. Sometimes you can lose track. But again, staying disciplined and keeping that vision of patience, is very important. When looking at price action, because if you're just looking at the markets, it just looks like a graph. It just looks like a line, just going up and down. But knowing certain price points where you can capitalize on is very, very, very important. And like I mentioned, knowing market structure is key. I can look at the chart now and break it down. In my early trading career, I didn't know what I was looking at. I just know I could make money if I buy or sell. Now I know certain price points, where structure breaks, where I can enter a trade. I know where a retest can happen on a structure break and capitalize on a trade now. So those are very important aspects of the market to know. And again, you have to develop vision. It takes a great deal of patience. I can't stress this enough, ladies and gentlemen. At the beginning of my trading career, I had no idea what was going on. It took me about 2 years after my first year of trading to develop vision and to say, look, okay, what can I do to develop the skill? What can I do to develop a mindset to actually know, what I'm looking at? And you just have to pretty much have a sound approach and, just have that key sharp ability to analyze price action, not only in the present tense, but you want to forecast ahead to kind of know your bias of what position you want to take at that given moment. So it's just not only the present, it's also just looking ahead to a take profit, looking ahead to, next week's level of price action where you could capitalize on a trade. So it's very important to have vision and not just sight and looking into the foreign exchange market. Work ethic. I can't tell you what to do. I can give you a guideline on what to go by. But again, we're humans. We don't know everything, but it's times where we like to think we know everything. And again, that can definitely be a negative situation for you. I can't make you set an alarm, getting up around 2 o'clock Eastern time in the AM, getting ready for the London session. I can't help you look at price action from last week, the week before last, 3 weeks back. I can't make you back test. Whatever your approach is, you have to have some type of, I guess, goal to get better. on a weekly and a daily basis. Because if you're just a lazy individual, uh, that doesn't mean you can't be profitable. Because I'm a lazy individual. I can tell you now. This is why I trade. I'm pretty much a person that's lazy, and you have to be honest with yourself to know how to develop the person you are, to develop your work ethic in a way that's profitable for you. Because everyone can't get up early in the morning, if they have a job like I was doing pretty much every day. Everybody can't stay up all night, and these are things that I want you to avoid. You don't have to just constantly stare at the charts and to be worried, if you're gonna go into profit or not. These are things that I did that pretty much hurt me early on. But again, having a good work ethic, knowing what you're looking for, having a good work ethic towards being patient, having a good work ethic, it just being disciplined and sitting on your hands if you don't know what's going on is very important. Having no work ethic, the market will definitely, take your money if you don't have a sound approach to a consistent, profitable, system when knowing what you're looking at when trading foreign exchange. Trader type, trader personality. Who are you? What type of trader are you? Like I stated in the previous slide, I'm pretty much a lazy individual, and the market does reward being lazy. You know, if you're a lazy person, maybe being a position trader will be good for you. Just holding trades for weeks or months can fit your type of personality. If you're the individual who's a quick decision maker, you're kind of quick on your fingers, you're kind of impulsive. Maybe being a scalp trader will be good for you. But just knowing who you are first is very important. Who you are as an individual can change you when entering foreign exchange. As I started making money, I developed a greed effect where I would just stay up all night. I would miss class. I would be late for work, and that pretty much burned me in those situations. But you have to pull back, be patient, and you have to learn to not develop these type of habits when you make money. Because at the same time, what's going to happen when you lose money? Because it's going to happen. How you recover from that loss is very important. Just it's just as important as making the money. So you have to play both sides of the coin in a progressive learning manner. As I stated earlier, being a person that's laid back or a person who's just kind of super chill, maybe being a position trader where you hold trades for weeks to months to years, is the type of trader you are. If you're a person like I mentioned who's just quick on your fingers, just impulsive, you're probably a trader that's a scalper. Day traders, they have a little bit more patience. They have pretty much a duration of the day where they trade. A swing trader, they hold trades from days to weeks. You're gonna fall somewhere based on your personality into either of these four categories. But the main thing I stress to everyone, you have to be disciplined, you have to be patient, and you have to have a strategy. You have to plan out how you're going to trade consistently and to be a consistent, profitable trader. It's about strategy. Because again, the markets are engineered. So you have to have some type of arsenal to go against them trying to take your money. You're not going to catch a trade every day. You have to be patient and wait till your model presents that fits your trading criteria, that fits your trading system. Like when you make the money, pull back. Use that money for something. Pay a bill. Do something to help yourself. Pull back from the market. Study that winning trade. Study that losing trade. So whatever type of trader you are, you of course have to be strategic, and you have to be a trader who plans. Have to be a trader who plans. You have to be a trader that's strategic. Be a strategic day trader. If you're a scalper, be a planning scalper. Be a strategic swing trader. Be a strategic position trader. Whatever your trader type, whatever your personality type, you have to be strategic. You have to have that sound approach to be profitable on a consistent basis, because that's the only way to get you retired. That is the only way to kind of yield results of you making, large amounts of money, because it can happen. But of course, without strategy, you're going nowhere. Real versus live. I know everyone who's had a demo account, they think they got it after a couple winning trades. But, ladies and gentlemen, the irony of it is you don't. I would suggest any investor coming into Forex to utilize a demo account for at least the first 6 months of learning. Because again, the learning curve, you're just going to have to endure patience. So while you're enduring that patience and learning, you can utilize a demo account as you go along. And as you go along using this demo account, you document wins, you document losses in a trading journal. I hope you guys are listening. And again, I just want to stop it right here. If you have any questions at this point, DM me one-on-one. I'm more than glad to go over certain points of this recording. To answer any questions, definitely give me a thumbs up, subscribe, share this content. I want to say this, and I want to be clear when I say this. Do not start a live account and just go straight into trading without any proper knowledge or proper experience. It took me my first 3 years to lose. It took my first 3 years to fail. It took my first 3 years to understand this isn't just a walk in the park. So again, utilize a demo account and don't let that demo account go to your head. Don't over leverage the account. You see people out here with $100,000 demo accounts, and they're advertising, on social media, showing profits that of course are on a demo account. Be realistic, guys. Back to that first slide on that last bullet point. Don't have unrealistic expectations. Have real expectations when doing this, because what you're doing on a demo, if you have $100,000 account, you're not gonna do with a live account where you have $200 in it. It's not the same. So don't do unrealistic things on a demo account that you're not gonna do on your live account, because again, you're gonna get burned and you're gonna for sure lose money that way. And just a FYI, trading on a demo account is skewed anyway. You have to take into consideration the spread. It's pretty much no spread on a demo account. So it's the total opposite from a real live trading account, as compared to a demo account. And this is something that's very important. This is very essential. Trading a demo account when you lose money, yeah, it's like whatever. But once you commit live funds, I don't know what it is about the psychological aspect, but something changed. Something changes within you. Real money is on the line. It's serious at this point. Something changes within you. So you would want to approach that demo account with realistic operations as you would operate, a live account. Because I'm telling you, once that real money is on the line, you're going to feel how, emotions can come into play. But again, it's ways to stay away from that. And to do that, of course, you would just want to utilize a demo account for some time. You would want to be patient. You would want to document wins. You would want to document losses. And you would want to study both. If you lose on a demo, study why you lost. If you lose on a live, study the loss on a live account. Keep a trading journal. You have to keep documents of this to know how to stay away from this move again in the future when it presents itself again. Because it's going to present itself. The markets repeat themselves all the time. Because the markets pretty much do the same thing every single day, every single week, every single month, every single year. There's 3 things they can do. They can go up, they can go down, or they can just, chop sideways in consolidation. So you want to just be aware of price action itself when utilizing a real and live demo account. Next, wins versus losses. As I stated earlier, you're that trader that wins 3 winning trades and you're just on a money high. It's about the money at this point. All your systems, all your discipline, Your patience has went out the window at this point. You're just ready to rush back into the market and just trade and just make more money. But again, that's a for sure way to lose money. As we win, that's what we want to do. We're coming into forex to win. How are you reacting to wins? How are you studying the wins? How are you documenting these wins in a trading journal? This is something that I'm doing as of recently. I often would utilize my computer just to kind of type a summary of wins in the past. But now I actually have a real trading journal, an extensive detailed journal of my wins and, of course, my losses. And how you react to losses is very important as the wins. You would want to know why you lost. You would want to continue to study a loss to keep a loss from happening. Nobody wants to lose money. We're all in this for the same reason. But again, study losses. And if you see that, a stop loss has been hit, don't rush back into the market to get that money back. Just see how that trade plays out and document how the trade plays out. It's no need to want to rush back when you could potentially be right, and of course when you could potentially be wrong. But at that point it's 50-50. We're not in a gambling business. We're pretty much in a structured manner of being consistent. We're not here to gamble. So if you don't know, utilize a demo account. Do not rush back into the market to get this money back. Don't do this. Early on, of course, I was on a verge of actually just walking away from forex because I would just want to rush back after a loss, rush back and just commit funds when in fact I didn't know what I was doing. Do not be this person. Have a sound approach. If your stop losses hit, that's okay. It's gonna happen. You're not gonna win every single trade. For one, because it's not gonna be a trade every single day. So document the loss. Look at how the trade plays out. And if you're just that individual that wants to trade after your stop loss is hit and you don't know what to do, just utilize a demo account. We are not gambling. We're looking to be profitable. We're looking to have the knowledge and skill set to be consistent. But I'm hoping you will react with the criteria that I'm giving you to progress from a loss and to study wins and to stick with the criteria to give you, a higher winning percentage. Last slide is equity management. You have to be good with money. I was one of those individuals, investors who just wasn't good with money coming into foreign exchange. But just managing your money, not over leveraging, not risking too much of your account is very important. So know the risk that you're putting on with the trade. So just for instance, say if you have $100 account, don't try to put in a 25-cent lot size. That's what are you doing? Don't do that. You would want to trade in line with your account size. You would want to know the risk per trade when buying and selling every time. Know what you can stand to lose and also know what you can stand to gain given the amount of pips you're going for. Not the money amount you're going for, but the amount of pips you would want to stick with every time you make these trades. Always use a stop loss. Always, always, always. There's been plenty of times where, I've been in a winning trade and I pretty much had no stop loss or break even. It comes back, news comes and just spikes my account. So definitely utilize a stop loss. It's there for security. It's there for you to keep greed away. It's there, of course, to help a lot of psychological issues that could potentially be a hazard to your trading career. So having a stop loss is very, very, very important. And like I stated, leverage wisely. Do not over leverage an account because you can be right in your trade. And if you over leverage that account, it can blow the account in a matter of a couple pips. So leverage the account wisely according to the balance in your account. You have to know what you're risking. Always use a stop loss. And of course, leverage the account based on your account size. Don't trade based on emotions. This will of course, result in a loss of profit and a loss of equity in your account. Emotions take over, you can forget having a consistently profitable trading career. Because how many times I can tell you, well, I'm mad, where I've made $500 and I lost 200. For one, that money isn't even mine. I'm mad because I lost $200, but at the same time, I'm letting emotions take over that can carry into me rushing back into the market. It carries over into the next trade that I take later in that week, making me want to over leverage my account to get that money back just that much more faster, or to double that account just that much faster, within a day. If you're thinking this is a sprint, you might as well take up another hobby because it's going to burn you. It's going to beat you up. This is the HARE. Investors who come into the foreign exchange market and they're successful, they take the tortoise approach. I'm not saying you can't make a great deal of money in one day. You definitely can, but to do it consistently is different. Warren Buffett, for example, this has been his life's work, being an investor. And again, he did it slowly with the knowledge and the skill set and the patience to get to where he is now. So whatever goals you have, just know this is not a sprint. Trading on emotion is a big no-no. And of course, this psychological breakdown is here to help you if you just follow pretty much some of the guidelines that I'm giving you, because I lacked all of this. I traded, with the wrong risk. I never used a stop loss in my early years of trading. I would over leverage, and I thought the markets were against me, and that's when emotions took over. So once those emotions took over, I was in a rut. I was just pretty much lost at this point. But I had to, get myself to a position of having the right mindset and knowing what to do with my account size, having the right mindset to know how deep to put my stop loss, just having the right mindset to leverage my account uh, as I develop into my trading career. Our next bullet point is, of course, important. Just keeping a trading journal. Uh, I have my trading journal right here with me. I always have it. I have about 3 of them. They're pretty much full. So keep a nice, legible, neat trading journal with you to document wins, to document losses, to keep that strategic system you have in mind. You just if you have it wrote down, just write it down again. So you just constantly go over it. Write it down in the trading journal, and this keeps you pretty much in a straight, narrow path. It keeps you away from everything that's on social media. It keeps you away from what somebody is saying on the news. It keeps you away from just pretty much the outside sources. So without that trading journal, you're pretty much just a blind investor walking with your pockets open. So just kind of know what you're doing with the trading journal and keep that handy every time. Keep your trade set up handy every time. If the market isn't presenting you, with that trade that aligns with you in your trading journal, skip that day. Study that day. Go to sleep. Spend some time with family. Invite other people to look at our YouTube page. Invite people to join the Pitpreneur Telegram. But of course, keep a trading journal handy and utilize it every day. Utilize it every day. Refer to it every day, even if you're not trading. That's what people miss at times. You have to stick with something every day. Michael Jordan, he was shooting basketball, practicing basketball every day. Michael Phelps, he swam every day. Warren Buffett, he read, studied stocks every day. So you have to be in it every day. Keep some type of journal, keep some type of log to keep you in line, to being consistent, to keep you in line with being profitable.